Reading out of the Reference Guide to Regulatory Compliance on paper page 625 about bank powers, corporate activities of national banks, published by the OCC, and then activities and investments of insured state non-member banks, issued by the FDIC. These regulations govern the powers and activities of federally chartered and or insured banks. National bank powers are granted by the National Bank Act and are regulated by the OCC. State banks that are not members of the Federal Reserve System are subject to regulation by the FDIC and the various state banking agencies that charter them. Bank powers dramatically changed in 1999 with the Gramm-Leach-Bliley Financial Modernization Act. This law repealed the Glass-Steagall Act, which had been in effect since the Great Depression. Glass-Steagall primarily prevented banks from engaging in the securities brokerage business. Insurance sales were another area that was generally not open to commercial banks. The Financial Modernization Act allowed institutions to engage in a wider range of activities than ever before. The Financial Modernization Act also allowed national banks to form subsidiaries to engage in financial activities that were previously off limits to banks. Financial subsidiaries are governed by the OCC, and regulations to establish procedures for applications and activities were published by the OCC in 2000. The law allowed insured state banks to engage in the activities a national bank could engage in only through a financial subsidiary. The Federal Deposit Insurance Corporation, FDIC, issued interim regulations to carry out this portion of the law. Subpart 1, Corporate Activities for National Banks. Financial subsidiaries and operating subsidiaries of national banks. The coverage 1, operating subsidiaries of national banks, authorizes activities for national bank operation subsidiaries, and financial subsidiaries of national banks, authorizes activities for national bank financial subsidiaries. This is just so weird that it reads this way. So subsection 1 is titled Corporate Activities for National Banks. And basically all it's saying is where within the OCC regulation that financial subsidiaries and operating subsidiaries of national banks are covered by bank powers. Basically, National Bank Act. National bank powers granted by the National Bank Act. Subpart 2, Requirements Operating Subsidiaries of National Banks, is the title of Subpart 2. The general rule reads that a national bank may conduct business in an operating subsidiary. Activities that are permissible for a national bank to engage in directly or incidentally to the business of banking include providing authorized products as principal and providing title insurance as principal. There is an application requirement. A national bank that intends to establish an operating subsidiary to perform a new activity must first submit an application to and receive approval from the OCC. The application should include 1, a complete description of the bank's investment in the subsidiary, and I'm sure if there's a 1 that there's a 2. The proposed activities of the subsidiary. 3, the organizational structure of a subsidiary. 4, the management of the subsidiary. 5, the relations between the bank and the subsidiary. 6, if the company is engaged in insurance activities, a description of the type in which the company holds an insurance license. And 7, whether the operating subsidiary will conduct any activity at a location other than at the main office or previously approved branch of the bank. Letter C, no prior notice for certain activities. And this is under requirements of operating subsidiaries of national banks. When there is no prior notice for certain activities, banks, 1, that are well capitalized and well managed may acquire or establish an operating subsidiary to perform certain new activities in an existing subsidiary by giving the OCC written notice within 10 days after acquiring the subsidiary or beginning the activity. Number 2, the notice must include a complete description of the bank's investment in the subsidiary and the activity conducted, along with a representation that it will be conducted in accordance with the OCC policies. Number 3, if the notice relates to the initial affiliation of the bank with a company engaged in insurance activities, the notice must describe the type of insurance. Number 4, activities eligible for notice. A, holding and managing assets acquired by the parent bank, including investment assets and property acquired through foreclosure. B, providing services to or for the bank or its affiliates, including accounting, auditing, appraising, advertising, public relations, and financial advice and planning. C, purchasing, selling, servicing, or warehousing loans. D, making loans or other extensions of credit and selling money orders, savings bonds, and traveler's checks. E, providing courier services between financial institutions. F, providing management, consulting, operational advice and other services for financial institutions. G, providing check guarantee, verification, and payment services. H, providing data processing, data warehousing, and data transmission products for a bank or its affiliates. I, acting as investment advisor or financial advisor to governmental entities, businesses, or institutions, and individuals. J, providing tax planning and preparation services. K, providing financial and transactional advice and assistance. L, underwriting credit-related insurance to the extent permitted by law. M, leasing of personal property and acting as an agent or advisor in leases for others. N, providing securities brokerage or acting as a futures commission merchant and providing related credit services. O, underwriting and dealing, including making a market in bank permissible securities, also purchasing and selling as principal asset-backed obligations. P, acting as insurance agent or a broker. Q, reinsuring mortgage insurance on loans originated, purchased, or secured by a bank or its subsidiaries or agents. R, offering correspondent services to the extent permitted by the OCC. S, acting as agent or broker in the sale of fixed or variable annuities. T, offering debt cancellation or debt suspension agreements. U, providing real estate settlement, closing, escrow, and related services, and real estate appraisal services for the subsidiary parent bank or other financial institution. V, acting as transfer or fiscal agent, and U, acting as a digital certification authority to the extent permitted by the OCC. And X, providing or selling public transportation tickets, event and attraction tickets, gift certificates, prepaid phone cards, promotional and advertising material, postage stamps, and electronic benefits, script, and other media to the extent permitted by the OCC. D, no notice required when a well-managed and well-capitalized bank may establish an operating subsidiary without filing an application, as long as the activity is limited to those previously reported by the bank. The activity will continue to be legally permissible, and the activity will be conducted in accordance with any conditions imposed by the OCC in approving the activity for the prior operating subsidiary. E, fiduciary powers. If the subsidiary proposes to exercise investment discretion on behalf of customers or provide investment advice for a fee, the bank must have prior OCC approval. Subpart 3, requirements. Financial subsidiaries of national banks. Notice required. A national bank, national bank must file a notice before acquiring a financial subsidiary or engaging activities authorized by law through a financial subsidiary. Letter B, authorized activities. A financial subsidiary may engage only in the following activities. That's 1, activities are financial in nature and those incident to a financial activity, including lending, exchanging, transferring, or investing for others, or safeguarding money or securities. B, engaging as agent or broker in any state for the purpose of insuring, guaranteeing, or indemnifying against loss or harm, or providing annuities as agent or broker. C, providing financial investment or economic advice. D, issuing or selling instruments representing interest in pools of assets permissible for a bank to hold directly. E, underwriting, dealing in, or making a market in securities. F, engaging in any activity that the Federal Reserve Board has determined to be so closely related to banking as to be properly incident to it. Engaging in the United States in any activity that a bank holding company may engage in outside the United States and that the Federal Reserve Board as determined to be usual in connection with the transaction of banking abroad. And 2, any activity that is legal for an operating subsidiary, but the financial subsidiary must follow all applicable notice requirements. That's under letter B, authorized activities. Authorized activities for financial subsidiaries of national banks. Impermissible activities covered in letter C include 1, 2, and 3. 1. Ensuring, guaranteeing, or indemnifying against loss, harm, damage, illness, disability, death, or defects in title except as permitted by the Gramm-Leach-Bliley Act. 2. Real estate development or real estate investment except as expressly authorized by law. 3. Purchase by an insurance or securities subsidiary of the bank of assets, shares, or ownership interest in an entity that is engaged in any activity not authorized by the Bank Holding Company Act as an investment, except as such purchases are permitted by the Gramm-Leach-Bliley Act. Letter D, qualifications for controlling a financial subsidiary. 1, 2, and 3. 1. The national bank in each subsidiary or depository institution affiliate of the bank must be well capitalized and well managed. 2. The aggregate consolidated total assets of all financial subsidiaries of the national banks do not exceed the lesser of 45% of the consolidated total assets of the parent bank, or $50 billion. And 3rd, if the bank is one of the 100 largest insured banks, determined on the basis of the bank's consolidated total assets at the end of the calendar year, the bank has at least one issue of outstanding eligible debt that is currently rated in one of the 3 highest investment grade rating categories by a nationally recognized statistical rating organization. That would be the qualifications for controlling a financial subsidiary. E, letter E, safeguards. The following safeguards apply to a national bank that establishes or maintains a financial subsidiary. 1. For the purposes of determining regulatory capital, a bank must deduct the aggregate amount of its outstanding equity investment, including retained earnings, in its financial subsidiaries from its total assets and tangible equity, and deduct such investment from its total risk-based capital, and the bank may not consolidate the assets and liabilities of a financial subsidiary with those of the bank. 2. Any published financial statement of the bank must aggregate financial information for the bank. 3. The bank must have reasonable policies and procedures to preserve the separate corporate identity and limited liability of the bank and the financial subsidiaries of the bank. The bank must have procedures for identifying and managing financial and operational risks within the bank and financial subsidiary that adequately protect the bank. Sections 23A and 23B of the Federal Reserve Act apply to transactions involving a financial subsidiary in the following manner. A financial subsidiary is deemed to be an affiliate of the bank. B, the 10% restriction governing covered transactions will not apply to transactions between the financial subsidiary and the bank. C, the bank's investment in the financial subsidiary will not include retained earnings of the financial subsidiary. D, any purchase of securities of a financial subsidiary of a bank by an affiliate will be considered to be a purchase of the securities of a bank. E, any extension of credit by an affiliate of a bank to a financial subsidiary of the bank may be considered an extension of credit by the bank to the financial subsidiary. These are all proper safeguards applying to a national bank that establishes and maintains a financial subsidiary. Letter F, procedures to engage in activities through a financial subsidiary. A national bank must obtain OCC approval to acquire an interest in a financial subsidiary. And so these are the procedures that the financial institution should follow to obtain OCC approval. There's 1, certifications with notice. 2, combined notice and certification. And 3, the bank must have at least a satisfactory record of meeting community credit needs on its most recent CRA examination. So the procedures to engage in activities through a financial subsidiary. For the financial institution to obtain OCC approval to acquire an interest in a financial subsidiary. The procedures to file a notice for certification from the OCC reads as follows. The bank may file a financial subsidiary certification with the OCC, certifying that it is well managed and well capitalized. Thereafter, if the bank seeks to acquire a financial subsidiary or commence a new activity, it will file a financial subsidiary notice that states that the bank's financial subsidiary certification remains valid, describes the activity conducted by the financial subsidiary, cites the specific authority permitting the activity to be conducted by the financial subsidiary, certifies that the bank will be capitalized after making all necessary adjustments, and demonstrates that the aggregate consolidated total assets of all financial subsidiaries of the bank do not exceed the lesser of 45% of the bank's consolidated total assets of $50 billion. And lastly, if applicable, certifies that the bank meets the eligible debt requirements. The bank, under number 2, may file a combined notice and certification with the OCC at least 5 days before acquiring control of or interest in a financial subsidiary or commencing a new activity. This is being referred to as combined notice and certification. A combined form must be labeled financial subsidiary certification and notice. B, the form must list the bank's depository institution affiliates and certify that the bank and each affiliate is well capitalized and well managed. 2, describe the activity or activities to be conducted in each financial subsidiary. 3, cite the specific authority permitting the bank to engage in the activity. 4, certify that the bank will remain well capitalized. 5, demonstrate the aggregate consolidated total assets of the financial subsidiary of the bank do not exceed the lesser of 45% of the bank's consolidated total assets of $50 billion. And lastly, the bank must, in both cases, meet the credit needs of the community. Subpart 4, activities permissible for a national bank, as per various OCC interpretive letters or conditional approvals. You have A through U. A, place drop boxes owned by a common carrier at a non-bank branch. B, open branches under a trade name if steps are taken to avoid customer confusion. C, establish branches for the sole purpose of serving underserved communities. D, establish an advisory company for mortgage or real estate investment trust. E, provide Medicare and Medicaid counseling to customers and collect and disperse insurance benefit payments. F, furnish services to their affiliates, including accounting, auditing, appraising, advertising, public relations, and data processing. G, provide consumer financial counseling. H, provide credit card registration and notification services. I, furnish general economic information and advice. J, provide employee benefits and other human resource services to small businesses. L, offer financial planning, consulting, and insurance services. M, provide tax planning and preparation. N, conduct financial feasibility studies. O, arrange for commercial real estate equity financings. P, sell ATMs to other banks. Q, perform flood hazard determinations for other financial institutions. R, offer loan collection and repossession services to other banks. S, provide investment portfolio management services. T, provide internal security consulting services. And U, provide payment for information processing services. Enforcement of regulations affecting national banks is A and B here. A, administrative enforcement is given to the OCC, and there are FIRA penalties of the usual. But I'm going to move on to subpart 6, which is the activities and investments of insured state non-member banks, which is a FDIC regulation. And covered are financial subsidiary activities, activities as principal only, and exclusions. Under A, financial subsidiary activities, an activity that has been authorized for a financial subsidiary of a national bank under the Financial Modernization Act, and that can only be conducted by a national bank through a financial subsidiary. B, activities as principal only. This regulation does not cover activities engaged in other than as principal, and so does not cover acting as agent for a customer, activities conducted in a brokerage, custodial, advisory, or administrative capacity, or activities conducted as trustee or a substantially similar capacity. And letter C, exclusions. Banks acting solely as agent for the sale of insurance, securities, real estate, or travel services are excluded, as are activities that are not authorized or that are prohibited by either state or federal law. So, subpart F is the requirements of insured state non-member banks. The FDIC must conduct a prior review of any proposed activity. The state non-member banks may not establish, acquire, or hold a subsidiary that engages in financial subsidiary activities as a principal unless 1, 2, 3, 4. 1. The bank submits a notice to the FDIC and the FDIC processes the notice without objection. A. The FDIC will approve activities only if the activity poses no adverse effects on the safety and soundness of the bank. B. Approvals may be subject to conditions or restrictions that the FDIC finds necessary to protect the deposit insurance fund from risk, prevent unsafe or unsound banking practices, and ensure that the activity is consistent with the purpose of the law. 2. The bank and the subsidiary comply with Sections 23A and 23B of the Federal Reserve Act. And 3. All depository institution affiliates of the insured state non-member bank are well capitalized, and the bank complies with the applicable capital deduction requirements, and the bank does not consolidate the subsidiary's assets and liabilities with those of the insured state bank in any published financial statements. 4th, the bank and the subsidiary meet the financial and operational safeguards applicable to a financial subsidiary of a national bank conducting the same activities. CRA requirements here for state non-member banks. Is that right? State non-member banks. A bank may not commence any new financial subsidiary activity through a subsidiary as principal or directly or indirectly establish or acquire control of a company engaged in any such activity if the bank or any of its insured depository institution affiliates received a CRA rating of less than satisfactory during satisfactory record of meeting community credit needs on its most recent CRA exam before the time the bank filed a notice to begin the new activity. Lastly, subpart 8, enforcement of regulations affecting insured state non-member banks. That's administrative enforcement, being housed with the FDIC, and your regular fiat penalties.